Hi, so we are coming up on an election very, very quickly, I might add, and midterm election. And traditionally, midterm election years are not the greatest in the markets, though we might get growth after the election. Why is that, Doug?
Well, because there's uncertainty on which way the government's going.
The market doesn't like uncertainty.
It doesn't like it. And of course, with the combination of the Fed increasing interest rates and the uncertainty, it really spelled out for a much worse year than I thought it had to be or think it has to be.
Well, we've had a few other things going on as well, like Ukraine and...
But yeah, a war didn't help either.
No. Unwinding all the COVID craziness.
Right.
But we have a chart here that shows, people of either political persuasion tend to think that, when their party is in power, that the market does well. But I think that this reveals that
it doesn't really matter.
Doesn't really matter at all.
No.
In
Both
fact,
the parties seem to do quite well.
And in fact, the market tends to like it when the government's divided.
That's when it does the best.
And why is that?
Because I think they can't get anything done.
Right.
And that allows business to get going. So
there's at least consistent policy because it's not going to...
Right. And what we should say is divided, we mean the president is of one party and the House and House of Representatives and the Senate is of another party. That's when the market seems to really like the mixture the best.
The rest of us are just grinning and bearing it because nothing gets done.
But I think the real point is normally after an election, especially a midterm election, the last couple months are usually pretty good. And so we expect, may not be the end of this bear market, but we don't see it as being as bad as what we've seen in the past.
That sounds really nice.
Yeah.
Nice Christmas present.
So thanks for joining us. If you have any questions, please give us a call.